Fed Chair Jay Powell will testify later this morning on Capitol Hill in his semi-annual monetary policy report. Our next guest is going to be leading those hearings. Joining us right now is Financial Services Committee Chairman Patrick McHenry. And Mr. Chairman, thank you for being here today. This is a pretty important day for the markets. What are you hoping to hear from the Fed Chair?
Well, two things. I think important thing is to make clear what the Fed is now thinking going into this political year on rate setting. I think they need to send a certain message, a strong message with certainty about how they intend to process data, especially given the backdrop of the presidential election and everything being viewed in a political lens in this political year. The second piece is regulatory policy. Michael Barr has put forward a massive new regulatory regime in the name of raising bank capital. It's become a mess, and there's bipartisan opposition to this. There's opposition to the real economy, not just to banks, on this new proposal. And it's been called out as a massive dysfunction in the name of a capital rule. And I want to hear the Fed process on how they're going to the Fed process on how they're going to deal with this massive new regulatory regime, especially given the clock of a Congressional Review Act action by Congress that all agencies of government are looking to, especially Biden appointees, are trying to drive policy. So those are the things I want to hear. I think it's important to make clear how the Fed's going to work this year.
Let's just start out with your first question, the idea that you want to hear a very strong message on rate setting. I mean, the picture has gotten a little more complicated recently with some stronger than expected inflation numbers that have suggested maybe it's not going to be so easy for the Fed to cut rates, at least immediately. If they say we're dependent on the data, if Chairman Powell says we're dependent on the data, we'll see what happens. We've got a jobs report coming Friday and beyond. Is that strong enough for you just to say it's data dependent?
Well, it's data dependent, but we keep refining and hearing further refinement by Chairman Powell and members of the Board of Governors. And with each further refinement, the market gets to drill in a little bit more on expectation. So we're going to try to get what we can. For congressional oversight, it's always been difficult for us to get a clear answer from any Fed chair. But especially in these uncertain times, it's quite challenging for sure.
Yeah, you also have the added issue of this being an election year, and you hinted at that in your opening statements on this. If he says it's data dependent, we're not going to cut now, but we'll see what happens in the next few months. Is that a satisfactory answer? What happens if the Fed actually ends up cutting rates 2 months before an election? Does that raise questions to you from a political perspective? Because Jay Powell has been pretty clear saying, look, there's no politics involved. Do you believe him? Do you take him at his word?
Well, that's what I think he needs to make clear today, is that this is not going to be political data dependent. It's going to be economic data dependent, and to drill on inflation that is still a major economic issue for the American people. And the thing that I hear most clearly, the cost of everything has gone up dramatically during this president's term, and it's a huge political pressure point. And I want to make sure that they are focused on the data, not on the politics.
Is there anything he can say that, I mean, he's said that again and again. Is him repeating that to you today enough for you?
Well, look, he's got to refine that. I think he's got to be much clearer about how they're going to process this data. And we know we're in a political year. All the agencies, the Biden agencies, are trying to drive regulation as quickly as they can because the Congressional Review Act that gives Congress the authority to repeal major rulemaking, they're under that clock. And so we want to make clear, I think Chairman Powell needs to make clear that with this capital rule, that they're not going to look to the Congressional Review Act. They're going to try to make this dependent on the data, make sure it's wise policy. And if it gets very complicated with refinements to this rule, that they will repropose and start afresh. The Fed shouldn't be dependent on the political clock. They should be dependent on driving what is important for the economy and price stability.
Yeah, the other issue that's out there right now is stability in the banks, and there's some debate back and forth about what's happening at New York Community Bancorp, if that is something that is contagion potential for other banks that are out there? Just even if it's not contagion potential, what's happening with real estate, and that's a big issue for a lot of the regional banks. How many questions do you have just in terms of the financial stability of the system at this point?
Well, I think the system is safe and sound. The bank failures we saw last year at this time were two very specific instances of the rapid rate increases having a major impact on bank balance sheets. New York Community Bank is one directly related to real estate. I think the market is making a very severe statement about their assumption about the bank, and I think regulators may have to respond. If they have to respond, I think they have the capacity and the law to do that, and we know how to resolve banks without those that have deposit insurance, without them being taking any hit to their accounts.
Mr. Chairman, where's your sense of the economy right now, whether the Fed should or shouldn't cut rates? Do you have any thoughts on that before you hear from him?
Look, I mean, we have inflation that is receded in many of the ways that the Fed measures this. The average experience of the American people is a lagging indicator of the current economic data. So I think the Fed just has to be clear about this. I've tried to be thoughtful about my rhetoric on the Fed. Unlike most folks in Washington, I'm much more concerned about the regulatory policy than I am about whether it's one rate cut or six this year. That's something the market can go opine about. I'm trying to make sure the regulatory policy isn't absurd and dumb. And at this point, what we see from the bank capital raise that Barr has proposed is it's both absurd and dumb. And we'll hear a lot about this in a bipartisan way today.